Hello, everybody. It's the 2nd of June. We are Signal Centre Talking Ball. I'm Joe, joined by Steve. How are you doing, Steve?
Very well, thank you. End of
Good.
another week.
End of another week, indeed. Okay, so let's wrap this one up with the latest headlines and then get onto some charts. It's Non-Farm Friday, so expecting a volatile end to the week. In terms of the latest headlines and what's been moving markets over the past 24 hours, Eurozone inflation declined sharply yesterday. That's following on from the German number that we saw on Wednesday. The headline Eurozone inflation number declined to 6.1% for May from 7% in April and below consensus forecast of 6.3%. The core rate also declined to 5.3% from 5.6% and below expectations of 5.3%. The number yesterday from the ADP jobs number was stronger than expected. The data recorded an increase in private payrolls of 278,000 for May, following a revised 291,000 increase the previous month and above the consensus forecast of 175,000. The US manufacturing number remained in contraction. We had the ISM manufacturing number yesterday. The index edged lower to 46.9 from 47.1, which was marginally below the consensus forecast and the seventh successive reading in contraction territory. There's been a number of US layoffs which have increased. The initial jobless claims number increased slightly to 232,000 in the last week from 230,000 in the previous week and close to the consensus forecast of 235,000. The Fed continues to expect a drift lower. The Philadelphia Fed president stated that he backed a skip for at least one meeting. That's further from what we saw earlier in the week. With weaker ISM pricing data, there was a further net shift in expectations, with the Fed funds futures now indicating the chances of a June rate hike has dipped to near 25%. That was up at 70% last week. The dollar retreated further from a 9-week high, very sharp move to the downside yesterday on the dollar index following the data that came out and the Fed rhetoric, and it hit a 1-week low and rebounded only ever so slightly, but again on the back foot this morning. We'll come onto the chart shortly. The US Senate, as expected, approved the debt ceiling deal. They voted in favor of the bill with a comfortable majority, and the legislation will now be passed and signed into law by President Biden. We've had some UK mortgage data out that has seen a decline in the amount of new approvals to 48,700 for April from a revised number of 51,500 the previous month and well below consensus forecast of 54,000. Again, further evidence that the lending is being restricted in the UK. And today we have US non-farm payrolls. The report will be released at 1:30 as always and will be an important number for the expectations surrounding the US economy and the Fed policy. Consensus forecasts are for a net increase in non-farm payrolls of just below 200,000 from 253,000 previously. And we'll also be watching the unemployment rate, which is forecast to edge higher to 3.5% from 3.4%. That's it for the headlines. Steve, let's get stuck into some charts. As always, if there's any requests out there, people are looking to get positioned ahead of the non-farm payroll today, please post up your requests and we'll do our best to cover them.
Thanks, Joe. Let me share my screen. I'm going to straight away dive into Bitcoin. Bitcoin has had a bit of a rally overnight. Here we go. We are in the middle of on the daily chart. We're looking like a topping formation, and we've been selling off since Monday. Really, had a bit of a reaction higher today for the first time this week. Really, well, any sort of decent reaction, but there's still a long way to go, obviously, in the day. We rallied off the. I've got this important pivotal level, we'll call it, 26,500. This was formed by the left shoulder, between the left shoulder and head, the lowest point between there, posted back on the 27th of March. And since then, we've closed below it on the one occasion, which was the 24th of May, and we reacted higher the very next day, posted a bullish hammer when we bounced off support at 25,800. So we've retested that support level there and reacted higher from it. So it's a slightly positive overall start to the morning, trying to fight back, but we're still around about yesterday's close. So a lot of work to do. On the shorter term charts, interesting ones for me are the hourly and the 4 hourly. We're below the Ichimoku cloud on the hourly. We're retesting, so there is a little bit of a potential bottoming of formation here on the hourly chart. Really need to get back above 27,350 to open up the upside and to give us some more heart, but that'll be a resistance level. So a hourly close above that level, and I would think we got potential for further upside. We have formed a short-term bottom, posted a bullish hammer at 1 o'clock this morning. On the 4 hour chart, we've got a similar sort of move going on. Posted a bullish hammer in on the 1 o'clock to 5 o'clock candle, but we are still below the Ichimoku cloud, so really need to get back above, as I say, that 27,350, close above there on the 4 hour chart, and potentially further upside. If we don't, we're still in this overall daily chart negative theme. Ethereum, similar type of price action here. We bounced off the cloud on the 4 hour chart, and levels to watch. We have actually taken out the 1 o'clock candle from Thursday. We posted above there, pulled back to it now. Levels really of resistance, I would say around about the 1917 to 1930 level above. Support coming in anywhere between 1840 and around about 1855. On XRP's doing okay as well, although resistance is above at 52 cents, and then above that we've got resistance coming in at about 53 cents. Below the real level of support is 50 cents, quite a psychological level, and then we've got further support all the way down at 47.80. So crypto's covered. Commodities, gold, oh, fuming, aren't I? Fuming. I had a gun to head trade idea on this yesterday, which I absolutely got smashed on, so stopped out on, unfortunately. I was playing this downward trending resistance line, the Ichimoku cloud resistance, a number of other indicators showing sign for potential weakness, but the candle, what candle was it? 2 o'clock candle, really wiped me out. We had a decent rally, dollar strength disappeared, and we had a load of dollar weakness come in, and gold just took flight. So really sort of had a decent move up. It did stall in front of resistance 1985 we're talking about, and we're hanging about just below there. We're only about $7 away, and obviously we've got non-farm payroll coming out later, so we are expecting dollar volatility. So maybe this is the level to watch really on the upside, 1985. I would go with the flow above that. If it does break 1985 meaningfully, then I think that's a really sort of like nice bottom that we've put in place around about this 1930-35 level. But obviously just be aware, if we do start to break down and take out maybe the 1965 level on the downside, then that could again open up further weakness. All about the dollar, and obviously non-farm payroll, although on its own I don't think it's as important as it is. Obviously a sort of like a monthly non-farm employment figure is important overall, but taken on its own it's maybe not important, but the market loves the volatility from it, so we are just have to respect that. Normally I'd like to put my hands in my pocket and not trade at all, but we've got a gun to head trade idea to do, so we can't do that. Anyway, short-term chart on oil, that moved lower, got down to 67.12. That was on Wednesday, and then since then we've broken higher. The Thursday candle at 3 o'clock had a really nice break higher, and pushed up towards eventually sort of like topping out about just above the $71 level. We've found a little bit of support at $70 and $71.10 the resistance. So trader range really is sort of like until a break of there, and I think we'd expect sort of like a little bit of a trend to kick in again. Potentially dollar weakness has assisted with that move. Natural gas actually has broken down. 4 hour chart, we were holding around about that 226 level to 235. We have taken out the support at 226.30, broken down, forming a bit of a bearish flag there. So potential for further weakness really, a continuation of that. Support coming in really on this chart at between 206 and 209 on the natural gas. Unless there's any other commodities requested, then we should dive straight into the dollar and the FX, and then we'll come back to the indices.
Sure. Okay. So as Steve mentioned, there was a big old move in the dollar yesterday. Prices coming up into resistance at 104.20, just shy of a 78.6 as well at 104.80, and reversed sharply. So we got some warning signs on Wednesday when prices pushed higher, but then closed towards the open, posting a bit of a shooting star candle. And yesterday we saw some pretty dramatic follow through on the downside. So this is because of the Fed now looking as though they're going to skip the next meeting without hiking rates. Also, we saw inflation lowered in the Eurozone and the debt ceiling approved. So all these things combined together have meant that dollar has sold off, and in quite dramatic style as well. Big down move yesterday and following through to the downside today. So it looks as though we may continue to see a bit of a corrective move. We've got support in place at 102.83. And on the upside, I would now expect that any rallies will be limited to around this kind of zone here, at that low that we posted on Tuesday, coming in at around 103.88. So yeah, it looks as though we may be rounding off a little bit in the short term, potential for a bit of a dip. Still doesn't completely eliminate the bullish threat here that we have on the dollar index. Any pullback into this zone here between 102.23 to 102.83 may provide opportunities to buy before maybe another retest higher. So we'll keep an eye on that. But for now, it looks as though it's on the back foot. And if we look at euro US dollar, interesting move on this yesterday as well. A bullish engulfing candle formed. We can see a big bullish move to the upside. We had a bit of a tight wedge on the daily chart, which has been broken in some style, and we are pushing higher today. So ending wedge formation potentially there. It looks as though this sort of minor correction is now over, and we may see further upside potentially towards resistance at 109.42. So looking pretty good on euro US dollar today. So cable's been holding up really nicely anyway against the US dollar, and obviously benefited from the weakness yesterday, pushing higher again, and now approaching the reverse side of this broken trend line, which goes all the way back to September last year. So it'll be interesting to see if we get any kind of reaction at that level. I would suggest maybe somewhere in around here at 126.02 may provide some short-term resistance. And if I was to sell it, and this is to be a bit of a top pattern, I'd be looking really for that kind of level there in order to get short on a speculative basis with a fairly tight stop loss above these recent highs. So potential opportunity there on the short side, but we have seen that the dollar index is rolling over to the downside. So at the moment it is very much on the front foot, but we'll see how it reacts at that 126.02 level. Okay, let's have a look at some other currencies. I don't think there's many requests today on the currencies, which so therefore I'll just focus on the majors. Let's take a look at dollar yen. Haven't looked at that for a while. So that broke through resistance at 137.91. We then hit a 50% fib level. We got above that, and we have rolled over a bit to the downside. So now seeing a pullback, we would expect that 137.91 level will provide some support now. So we are heading towards that level, and it'll be interesting to see what happens when we get there. Let's take a look at dollar CAD. That's been pretty choppy and range bound, as we can see. Prices really gyrating within this kind of range. Although prices are slightly sloping upwards, we can see there are a number of higher lows that are being put in place, but clearly significant resistance here at 136.47. The last few attempts at trying to break through that level have failed, and prices have sold off pretty sharply. So fast approaching the trend of higher lows there on dollar CAD. Let's take a look at these commodity currencies, starting New Zealand dollar versus the US dollar. So that broke down through support at 60.84 on Thursday, the 25th. We then come into a 50% fib level of this entire up move, and we found support there. We posted a bullish outside candle yesterday, and prices are pushing higher again today. So a nice bit of support there found at the 50% fib level. We do have some now resistance to contend with above the next level coming in at 61.15, and then above that probably be looking for a retest of this low here, which is at 61.82. And let's take a look at Aussie, see what that's doing. So that overshot the 61.8% fib level. Looked as though it was going to start heading down towards the 78.6, but it came roaring back yesterday. Again, we saw a bit of a warning sign there on Wednesday with a decent reversal off of the lows. And prices are very much on the front foot. Looks to be the best performing currency on my list at the moment, other than Aussie yen. And prices are continuing to move to the upside. So anything linked to the dollar, again, a bit of a revival today. Okay, let's have a look at indices, shall we, Steve?
Yeah, we can take a look at indices. A couple of things I'm looking at as well. I'd like to take a little bit of a look at stocks. So I'll have a quick browse over indices. Take a look at DAX. DAX is one of the most focused on indice in Europe, obviously, and we have formed. Well, we look to be forming a bit of a topping formation. The weekly chart, obviously, let's just a reminder from the made an all-time high the week of the 15th of May. Negative price action took out some meaningful support levels, and we did a gain this week. However, we have had a bit of a reaction higher over the last 24 hours. We can see on the daily chart really how that's played out. We took out the support level that we had here, but closed around it on Wednesday. And Wednesday we had just a straight line rally, no turning back. Really nice rally, taking out Wednesday's highs overnight as well today. So looking pretty positive on Germany 40, and looking at the 4-hour chart, we did have this downward trending resistance line that we had drawn in. We can redraw it really, taking the top of each of these like quite important candles. We broke up through it today, and we're back below it at the moment. The Ichimoku cloud is doing a little bit of a resistance job here as well. Obviously, we've got horizontal resistance all the way up to 16,081. So 16,000, a bit of a psychological level. 15,945 we're trading now. On the hourly chart, we have broken up through the cloud and a nice little bit of upward momentum after that break of the resistance at 15,863. So DAX looking quite bright this morning. Still got a lot of work to do. Non-farm payroll will sort of like, we'll see how that gets on with that. On the Dow side of things, very positive daily candle yesterday, bullish outside candle on the daily chart, and again we're off to the races this morning, sort of pushing towards yesterday's high. We've got resistance coming in this evening, star formation that was formed between Friday and Tuesday. The 3 candle formation looks to be threatened this morning. If we do manage to take out that 33,248 high, then we're on a way, especially a close above there. So yeah, seems to have sort of like formed a nice little bit of a bottom. The 4-hour candle is above the cloud as well, so that is pretty impressive on a short-term basis. Looks to be putting that bottom in place. Nasdaq, again, that Nasdaq has been outperforming a lot of the indices recently, and it did it again yesterday. 2 o'clock candle showing huge strength. We're back up to testing those 14,530 resistance levels. Take a look at the weekly chart. Still got a long way to go to get anywhere near. Let's take that one out, and let's put a little bit fib in, see if we've got any fib levels to really bear in mind. 61.8%. We've just taken it out, and we're trading above it at the moment. Next real resistance for me would be the horizontal highs that we saw back in January this last year, 15,273. That would be a decent effort if we could get up to there. See if there's another, yeah, bit of a confluence there with a Fibonacci retracement coming in at 15,414. So that's pretty decent. Just been chatting to Ryan on the chat, on the TradingView chat, and he's quite interested in commodities. He's also talking about he's from down under, from Australia, and so I'll take a look. Yeah, g'day, mate. Take a look at this head and shoulders formation that I've highlighted on the chart, and I haven't looked at Aussie 200 for a while, so this was I must have sort of done this since probably the start of May. Put this formation in there. It gives us a few decent levels to watch. The Aussie 200 market is made up of a mixture of stocks, some commodity stocks as well. So this will give us a good idea what's going on. For me, we failed to take out the all-time high. We stalled the week of 30th of January this year at 7545. Broke down lower and looked to be forming a right shoulder now. So that is in place. There doesn't seem to be anything to really argue against that. I mean, I suppose we are having these spikes down on the weekly candles, so it's not a straightforward right shoulder and then collapse. We are sort of finding some support and some interest in buying here, and that we're seeing that across multiple indices. But yeah, quite sort of like clear in the Aussie 200 that we are finding this buying support. Now the neckline support is still quite a way away, 6,866. That would be the real key level for me. However, if we do form a sort of like a really strong bullish hammer and then start to get a reaction higher and take out that resistance around about the 7,400 level, then it would make me think that we have actually formed this double bottom formation here, broken through this neckline here. That comes in at 7128. Again, that would be another level to watch when we get down to trading around there. We're not far away from that now. And we, that the double bottom then kicks on and then didn't quite make the measured move target that it was expected to make, but it still sort of like keeps it a little bit alive, really, and definitely something to watch. So we have had this like up move, feels like a failure at the moment, looks like a failure at the moment, but until we get a break back down below 6855, it's not a complete failure. So yeah,
I've
and
taken a look at these stocks actually.
yeah, have you? I mean, I
Yeah.
sort of like got them up there. What do you think? I mean, the PDM was a bit of an interesting one.
So you're looking at a weekly.
Yeah,
I
that's
was looking
weekly
at it
chart.
on a daily.
Yeah, show us your chart.
So basically just a massive area of support that it's fallen into. If we can go back all the way to the left hand side here, back in July 2021, we can see that there were some lows in here which eventually broke up and triggered a massive move to the upside. But since then we've just been unraveling all of that, but we're back down to that level and saw a very strong reaction again yesterday. If we look at the overnight, well, the gap on this, pretty significant.
Yeah.
So from a speculative point of view, buying close to that support level at 0.53 looks to have been a pretty good area to have got involved. So I would say probably still got a bit more work to do before we can get too bullish about the longer term prospects, but certainly in the short term it's had a very good move. So as a strategy, maybe buying a pullback to fill that gap at around 60.05 would not be a terrible idea. I mean, obviously you can see there's massive moves here on my watch list. There's been huge moves, and obviously these stocks are very sensitive to what happens with the US dollar because they are commodity based stocks. And there's been a huge move in the US dollar to the downside, which has, freed these up a little bit to move higher. So that's pretty positive. What was the other one? So Lotus Resources just looks as though it's sort of trending lower within a kind of wedge formation until we get a break out of that. It may continue to be quite choppy and sideways. I'd be looking really for a break of that resistance at 22 to reverse the fortunes there and start looking for higher prices. Deep yellow, this one looked probably the best from a technical perspective. Looks as though we've got a really nice inverse head and shoulders there. A big gap higher, big break through the neckline that was saw in today's session, Friday's session, and therefore could continue moving higher. In terms of where we'd expect prices to go, if we were to do a measurement of the head and shoulders, that suggests a move up to 0.825. So that looks pretty good. Again, buying pullbacks to that neckline would be the preferred strategy. Let's have a look at BOE. That looks as though it's maybe broken out of a bit of a pennant formation. Again, big gap to the upside, but I'd caution on this one that we've got pretty significant resistance going back to November 2021. So it's coming into that level pretty hot, and that may stall prices in the short term, but certainly that's a very good continuation pattern that we've got there. But again, just be mindful of that resistance at 3.08. And Peninsula Energy, didn't get much of a chance to look at this one. Looks quite illiquid, judging by the shapes of the candles that we're getting here. But from a technical perspective, looks as though it has broken through resistance at 0.17. But a bit of a gravestone looking doji there. So we pushed higher but then closed back at the levels that we opened following that gap higher. So a little bit of indecision there. But all in all, I would say that's probably quite a bullish pattern. But as I say, it looks pretty illiquid.
Yeah.
So yeah, hopefully that helped, Ryan. A bit off piece there, but we didn't have too many requests coming through. So
Yeah. It's always
happy
good to
to
look at
help where
things
we
different,
can.
isn't it?
Definitely, yeah.
That Paladin energy, one of the things that you sort of said, it's like quite an important support level it's bounced off, and it actually goes back to 2013, 2014, and you can
Wow.
see it was quite a sort of serious level back then.
Yeah.
We did have a sort of like a bit of a breach of it on the week of Monday, the 20th of January, 2014. That's like over 9 years ago. But you can see it sort of did act as resistance, and once it's broken up and taken out that resistance, you can see again. Another level to watch, I think, would be this this level it made here, which we sort of like seem to have closed above. I think it was all a bit strange, really, that sort of spike down yesterday. Really, if you break it down to the hourly chart, it was almost like a bit of a volatility spike just before the close. So here we go, 1 o'clock. It's sort of like I opened up at 1 o'clock. At UK time, this is obviously not Aussie time, and then sort of like opened up and traded a lot lower, but then during the day just made up those gains and said, what's going on? I don't deserve to be down here. Bounced off those levels quite nicely. So yeah, interesting. And like Ryan was saying, he's really sort of like some Lobo Tigra. I don't really know who that is, but obviously sort of like maybe an analyst in Australia, and he's very bullish on commodities such as uranium, gold, and lithium, and you know, every right to be so. And a lot of the time, you know, it is. I suppose we go back to it's all quite heavily influenced by the dollar, because when we talk about gold, we normally talk about gold in a dollar price. So yeah, but you know, these commodity stocks are really sort of important, or and the commodities themselves are really important. Lithium, obviously, to do with batteries, electric cars, although that's taken a little bit of a hit recently. That you know, I've noticed a lot of the sort of like high-end electric cars have sort of lost a lot of value of late, and it's a lot to do with them lithium batteries. Sometimes you sort of like, you know, the amount of energy taken to extract lithium from the ground is far outweighs the carbon footprint that it's saving in its lifetime, which is really something that we probably haven't talked about enough. And yeah, all these commodities very important for, you know, the advancements in everything that we do nowadays. All the, you know, electric, you know, batteries, AI, everything always uses natural resources. So yeah, it's yeah, quite an interesting one to look at, quite an interesting one to think about. So yeah, overall, I feel looking at all of those, there is the one sort of like there is potential to sort of like look for the upside, but I would be a little bit careful. On a short-term basis, I think, yeah, you're right. Longer term, the weekly charts for me still have a lot of work to do on the upside. The one, Boss Energy, actually, did you show this one?
Yeah, I
It was
did.
like
Yeah,
approaching that.
significant
Yeah, yeah.
resistance.
I mean, that's a huge channel to watch. It's not parallel channel, but something like that is like we're at the top end of, you know, as a swing trader, you'd be rubbing your hands looking to short this with a tight stop and decent risk reward. So yeah, just be aware of those influences. But yeah, thanks for that,
Sure.
Ryan. Appreciate that that different look at things.
Yeah, indeed. So we've got David joining us for his first morning live video. He's beginner at trading and has asked for thoughts on sterling New Zealand dollar. So we'll take a quick look at that. This is the daily chart, David. So each of these candles represents a day's worth of price action. And we can see that in recent days, there's been a pretty substantial move to the upside here. A number of green candles pushing through some significant resistance levels, coming through 2.0393. We also had a 61.8% fib level in there, which is pretty significant. Dates all the way back to these highs that we posted in March 2020, down to these lows that we posted in September 22. So we've smashed through those levels. We've also taken out this previous high from the 4th of February last year. And now what we're seeing is a retest of that level. So what should happen ideally on a technical basis is when we break through resistance levels, those levels should then turn into support. So we are seeing a retest of that level and ideally looking for some support to be found at that level on the daily chart. But yesterday we did post a bit of a shooting star candle, a bit of a reversal candle, and backing that up with losses today. So there's no reason why it shouldn't find support there. But these things can often overshoot, and today is going to be quite a volatile day given that we've got non-farm payrolls. And we can see there's a cluster of support down at this level as well. So it is entirely possible that we could overshoot into this kind of area here before potentially finding support and continuing this upward move that we've been on for a number of months. So all in all, I'd say it looks pretty bullish, but just be mindful of today's events. Okay, we better move this on, Steve, to the gun to the head trades. So
Okay.
this is where Steve and I pick trade ideas live on the stream. Just a bit of fun. But there are a few basic rules that we must follow. Of course, we must have stops and targets on these trade ideas. The ideas that we come up with must have risk reward ratios of 2 to 1 or better. So for every £1 that we risk on a trade idea, we must be looking to target at least £2 as a target. The ideas that we place are closed at 9 p.m. UK time unless the stops or the targets are reached, and we risk 1% of trading capital on each of these ideas. So we are running a live account, which we'll show on the screen in a moment, but we can also show yesterday's trade ideas on our TradingView profile where we published them. Steve was looking for gold to go lower, so we can click the play button there and see that sadly that didn't play out. The dollar came roaring back, and as a result gold continued to move to the upside. So that was an unsuccessful one. I was looking at selling Eurostoxx 50 into a nice area of resistance, looked to be failing at that level, got off to a pretty good start, got actually quite close, well, about midway to the target, but at 9 o'clock it was closed out slightly offside. So that wasn't a particularly great day for us yesterday, but we get to reload the gun and have another go today, Steve. So anything that's taken your fancy? You're on mute.
No, I'm sort of still looking at gold really, and sort of like wondering whether I should actually go again on gold. I mean, the thing about it is this is a much better level, and yesterday with the gun to the head, I did sell it. I was selling it on the idea that it would break that support at 1930 instead of waiting for the break of support then selling it, which you would do normally. But now it's at the top of the range where I was I was sort of like thinking, right, here's support down at 1930, here's resistance down up at 1985, and now we are up here again. I've redrawn this downward trending resistance line to take the wick into account there, and it's sort of like it gives me a little bit more confidence. We are above the 4-hour Ichimoku cloud, and normally I say, right, if I'm going to sell it, I want to be below the Ichimoku cloud on the 1 and the 4-hour charts. I'm going against everything in my body to sort of like do this. So I'm tempted to do this, but the weekly chart as well looks to be engulfing. So I think it's all down to non-farm payroll, all down to the dollar. This is like a high risk trade idea if I am to sell this. And I'm going to go again, Joe. Do you know why? Because I'm just mad. But also, I'm going to preempt this double top formation on the hourly chart. And why not? I hear you all shout. So, yeah, going against everything that I've talked about on the show so far, that's how I roll. Bit of a contrarian trader, so I like to sort of like go against the herd. And really, 1974 in my eyes would be quite important today. If we do break and close below that on an hourly chart, there's good potential for a retracement all the way back to around about that 1950 level. So I'm going to set up a short there, something like this. I can put the stop quite tight. Obviously, non-farm payroll, that's not the best idea in the world. But if I look at something like this, then I think I've got around about an evens chance if you sort of like really think about it. So I'm going to try and lock this in now. See what I can get on using a 1% risk. I can get 2 whole units on a risk 1788 if my stop is at, that's that. I mean, I don't mind that. That all looks set up to as though it's made up its mind for me. Let's get that trade on. There we go. So my stop's at 1987.581. And my target is at 1950.97. Give me 2.17 to 1 risk reward, which that's around about where my average risk reward is. So yeah, I'm in, Joe.
Okay, good luck. I'm going to take a look at sterling Swiss of all pairs. Just on my scan through the markets, I found this on the daily chart, which looks quite interesting. We can see there is a downtrend line in place here. We can see that prices rallied yesterday into that downtrend, and also we have a 61.8% Fibonacci retracement level from these highs back in October last year down to these lows in March this year. So it's rallied into that level, posting a bit of a reversal on an intraday basis. Let's take a look at the daily, the intraday, to see how that's shaping up. See what we can form here. So potentially forming a bit of a top. We can see prices are breaking down through minor support. Have we got a trend line there as well, maybe? Gonna have to squeeze that on. No, I'll leave that off. That's not great. Okay, so let's get this on. I'm going to sell it at market, currently around 113.21. My stop loss, I'd like to go above the highs, but that means it's a 71 tick stop, which is a little bit too rich for me, seeing as I want to get in and out of this trade today. And we can see there's maybe some support around this area here. So let's target that. Oh, just scrapes a 2 to 1. Okay, so stop at 113.65. Target at 112.35. Has Steve managed to get that on for a 2 to 1? Or we're just under? No, just over. Yeah, perfect. Okay, trades on.
Lovely.
So 2 trades on. Let's have a look at what, just recap on the data really. We know non-farm payrolls are coming out today because we haven't stopped going on about it. So that is the main thing that is due out today. That's at 1:30. We've also got the unemployment rate as well. Next week, we've got the US ISM services report. We've also got the Reserve Bank of Australia policy decision and the Bank of Canada policy decision as well as a Canadian employment report. So a few bits for us to look forward to next week, but we've got to get today out the way first. Be careful if you're trading today. It is likely to be a volatile session. Yeah, have a great weekend to everybody as well.
Cheers all. Have a good
Thank you
weekend.
very much.
Be careful.
Bye-bye.